Greetings everyone, welcome to Commerce Classes, and today's topic is adjustments in financial statements. That is, in the preparation of financial statements, how do we adjust or record the additional information given to us? Right. Now, before I explain adjustments, let me give you a brief idea about the financial statements. Though we have done financial statements in the previous videos, so I'll just give you a brief idea. Like in case of financial statements, we are given a trial balance. Right. So a trial balance is given in this format. Right, you are given various accounts and their balances, debit balance, credit balance and all. So this is given to you. Now from there we are to prepare financial statements. We have two type of financial statements. One is trading and profit and loss account, which is prepared for the particular year, right? And to find out profit or loss, this is also called income statement. We prepare it to find out profit or loss of the business during a particular year. So the first statement gives us gross profit, which is trading account, gives us gross profit, which is transferred, or it is the starting point of next statement, which is profit and loss account. So the first part is trading account, next part is P&L account, profit and loss account. So then you record other expenses, different incomes. So I'm not going into the complete details. If you have any, specific requirement regarding these statements, you can please watch my previous videos wherein I have explained the formats along with the examples in detail. So we calculate net profit here. Right. Now this net profit goes to owner and then we prepare a balance sheet, which is the second statement, which is a statement of assets and liabilities, right? So now when we prepare these financial statements from a given trial balance, we simply pick up the accounts. Like you might be given furniture, you might be given rent, you might be given purchases, maybe creditors. So you just pick up each account one by one and then classify its nature. If it's a nominal account, it goes in the first part, that is in trading and P&L account. If it's an asset or liability, it goes in balance sheet. So the accounts from here, they are transferred to final statements at one place. It will go only at one place. Now, do you know the reason? Reason is that anything which is appearing in trial balance has already come out of the accounting process. Do you remember the accounting process? Accounting is a process of identification of transactions and events. You identify the transactions, then you record these transactions in the journal, then you classify them. That is, the transaction is then classified into different accounts and then trial balance is prepared. And then we come to the final summarization part wherein the financial statements are prepared. So basically when we are here at this step, anything which is appearing in trial balance has already come out of recording and classification. So the transactions were recorded, that is, their dual effect has been recorded and it has been incorporated in the accounts, and so we have got the balance. So we'll simply put them at one place in these statements. Now what are the adjustments? Now when we say adjustments are to be done, then what are the adjustments? Adjustments are basically the transactions which have not been recorded. So these are also called additional information. That is, throughout the year you identified transactions, you recorded them, okay, you prepared accounts, but then at the end of the year you find out that there are certain transactions which haven't yet been recorded. So maybe your say rent of the particular month, maybe say March, is outstanding. This you got to know at the end. Okay, but you have already compiled this trial balance. So now how to do this? Should we pass a journal entry? Now we should open our journal and then we pass the entry, then we rectify our accounts, and then we prepare a trial balance, and then we prepare the financial statements. Now this is going to be a very lengthy procedure. So we don't do that. What we do is that we simply know that this is the transaction or additional information which hasn't been recorded. So simply consider the recording, that is, consider the dual effect. So if we are to record this transaction, then what is the dual effect? And then you post the dual effect in these financial statements at two places, because dual effect means the two effects, and so they will go at two places. So that is the basic difference in the trial balance information and adjustment. We need to remember that every adjustment implies a transaction not yet recorded. Since it hasn't been recorded, so we are to record it, but we do not want to do the whole excessive work of doing the journal entries and all. So we simply consider the effect and we post it at two places. Now as a norm, one of the effect goes in the trading and P&L account and other effect goes in the balance sheet. Now this rule usually holds true in most of the cases except for stock losses. Stock losses is something wherein both the effects will go in trading and P&L. But otherwise this rule holds true for most of the things, that the dual effect which you are considering, you will be finding that one effect will go in trading and P&L, that is, it may go in trading or in P&L at any place, and the other effect will be that it is either an asset or a liability. Now how do we analyze this? That we will take up next time, but right now what I am telling you is just two things. So what we are to remember here, just to remember 2 points. Number one, adjustments are unrecorded transactions. These haven't been recorded, so it has two effects. Okay, and we are to record both the effects. So we are to record both effects. Thirdly, usually, third point is usually, because I won't say that this rule holds true for 100% of the cases, but most of this time, you can say 99%, one of the effect goes in trading and profit and loss account, and the other effect goes in balance sheet. All right, so we are to remember these things only. So irrespective of the number of transactions given to us, what we are supposed to do, consider the two effects and then record them, one in the trading and P&L, another in the balance sheet. Now when you look at your books, you might be finding that there are huge number of adjustments given. So while understanding the adjustments and their working, we can classify these adjustments into certain categories. The reason of classification is that when we club similar type of adjustments together, it becomes easy to learn them and post them. So we classify the adjustments into certain categories. One is adjustments relating to income and expenses. There are four adjustments here: outstanding income, outstanding expense, expenses paid in advance, जैसे we call them prepaid expenses, or incomes received in advance, or pre-received income. All right. Then next is adjustments relating to debtors. In relation to debtors, we have additional Bad debts. At some places, you see, I am using abbreviations because I want to save some time. Additional bad debts, we might be having provision for bad and doubtful debts, right? Then you may have provision for discount on debtors. Then you may have bad debts recovered or excessive provisions written back. Okay. Next is adjustment relating to creditors. In respect of creditors, we have only provision for discount on creditors. Okay. Then you may have adjustments relating to fixed assets, which includes depreciation, which we may not have recorded. Okay. So you have land, building, furniture, machinery. You forgot to record depreciation on machinery, or when your accounts were being completed, the rate of depreciation was not yet decided. So it was left out. Now we are to record it. So it's an adjustment. Then you may have loss of fixed assets. Maybe there was a fire in your office building. Some of your fixed assets are lost. So how to record that? Then you have some adjustments relating to stock, which includes closing stock. Then you may have goods given away as charity or to employees for welfare as a gift. No, anything. You are just giving it to employees. Then you may have goods withdrawn by honor. The proprietor has withdrawn the goods. Like, sometimes we deal with those kind of goods um, which are consumable, useful. So maybe you have a business of, say, ready-made garments. You buy and sell shirts, trousers. So your owner may withdraw some of the goods for his personal use, so it's a drawing in kind. Then you may have loss of stock. So how to record for the same? Okay. Next is adjustments relating to capital. You may have, interest on capital. You have decided that now interest on capital should be provided for. So you have to record for the same. Then you may have goods withdrawn for personal use. Okay, so these are the adjustments. Finally, we have some random adjustments. Some adjustments which we could not classify, like you have manager's commission. These are also called typical adjustments because these are a bit difficult kind of adjustments. So not all questions will be having these adjustments. Then you have goods sent on approval basis. You might have sent some goods on approval basis. So how to record for the same? Then you may have consignment goods. You have received the goods on consignment. So how to record for the same? Then bad debts recovered. So there might be any other adjustment, but when you have understood these adjustments, you will be getting a fair idea for the remaining also. So these are the adjustments that we are to study. So from next video onwards, we'll be taking up these adjustments one by one. But right now, what you need to remember for adjustments is just two things. Number one, let me tell you that it is unrecorded transaction and it has two effects. Okay, this transaction is unrecorded and it has two effects. Number two, one of the effects will go in trading and P&L, another effect will go in balance sheet. So you see, you have two financial statements. One is trading and P&L account, another is balance sheet. So when you are given an adjustment, it will be recorded in both of these. And the reasoning is that this is unrecorded. Adjustment itself means unrecorded transaction. Now someone may wonder that why do we have unrecorded transactions? Because as a rule we record everything. So how do we get this? The reason can be, many. When you look into the adjustments, you yourself will understand the reason. I'll just explain you one thing. Suppose you have taken an insurance policy. Okay. Now, in case of insurance policies, we are to pay insurance premium in advance. Now, when we take up the policy, it is not necessary that we take up the policy right in the beginning of the year. Maybe that in the month of, say, July, you thought that now we must get our stock or our building insured. So you took up the policy. Suppose this is the year 2020. Now you took up the policy on this date. So the premium will be paid from July 2022 next June 2021. But your account closes on 31st March. You have already paid insurance premium. So this 3 months premium is in advance. So we need to adjust it later on. Similarly, you may have, salaries. Sometimes salary of the employees is payable, say, on the 7th of next month. So it is always 7 months. You know, you pay it after 7 days. So it is always outstanding for first 7 days. So do we need to record it every month? Every month we are writing that this is the outstanding amount, then you pay it, then it is outstanding. So why to do all this stuff? Simply make an adjustment at the end of the year for the relevant month only. Okay, so there can be many reasons for having the adjustments, but whatever be the reason, we are not to go into that. What we need to understand is that yes, there is an adjustment which has dual effect, and the two effects should go in the preparation of financial statements. One will go in the first statement, other will go in the next statement. All right. So this is all about the basic introduction of adjustments. Next time we'll take up the adjustment one by one. We'll understand the adjustment and then we'll do a question. All right. So that is it for the day. Thank you. Stay learning, stay practicing.